Good afternoon, everybody. This is Thomas Wood. Once again, we're going to be talking about the Value Charts live trading room trade of the day. I had another really good day. This is actually our first trading room since we've gotten back from the New York Traders Expo, where it was a pleasure meeting many of the people in the trading room and I'm meeting them face to face. So that was a lot of fun. We had another up day, really good day. We had a lot of very good trades. We also had a couple that were down. Overall, we were up for the day, though. I will just point out a few of my personal favorites from the day. This is excluding, they weren't necessarily all the most profitable trades of the day. They were just my personal favorite because it worked out correctly. Basically, it followed exactly what we were looking at. Now, the first one we're going to look at is a long in wheat. We had about an hour before we closed the live trading room. We went long right here where this blue arrow is, down in moderately undervalued, right around 728 and a quarter. And the reason we went long is because of a bullish divergence on an hourly and 30-minute chart where we had higher low indicators but lower low prices. So we went long there. If you had held that with a break-even stop like we talked about, even if you were holding it right now, you'd still be up around 11 cents, which is a very nice move, several $100s a contract. Also, there's a few people that are trying to hold it through the wheat announcement later today with a break-even stop. They don't believe it's going to move 11 cents or far enough to really kill their stop, hopefully. So we'll see how that ends up playing out. Now, the next one we want to look at is a long and a short in Treasury Bonds. The first one was a short where this red arrow is here. The reason we were taking the short is off of a bearish divergence where we had higher high prices, moderately overvalued, and a lower high indicator. We also ended up having a candlestick reversal pattern right there, a yellow hat doji. That would have given you the ability to take out around 10 ticks to the downside. Then we went long off of a bullish divergence where we broke through the previous lows with a significantly higher low indicator, and our MQ market strength was just about where the average rally or average sell-off was. So we had the okay to get long, risking the low, so we were risking about 4 ticks. With our stop loss, we ended up being able to take out around a point, just about, which is about $1,000 a contract in the 30-year Treasury bond to the upside. That ended up being a very, very good trade as well. Now, the next one that we had that ended up being a great trade was longs and shorts in the euro. Now, the first one we had a long right here where this first blue arrow is. The reason we had the long is because of a bullish divergence where we had lower low prices, moderately undervalued with a significantly higher low indicator reading. So we had the okay to get long. We covered that and then we reversed the position and went short. And the reason we did that is because we had significantly overvalued prices up at the high and our trend line was down, or our regression line was heading lower. So we were in a downtrend, gave us the okay to go ahead and get short. If you took that from there down, then you had another about 30 ticks to the downside. We also talked about going long here off of a double bullish divergence where we came back down moderately undervalued, higher low indicator, some momentum had increased to the upside. And then we looked at a 5-minute chart. We were overvalued again there, took profits and reversed, and you could have taken another 40 or so ticks to the downside with that short. So that ended up being a great trade. You were up over $1,000 or so per contract in that trade. Now, the next one that we're going to look at is crude oil on a 15-minute chart. This is the best trade of the day. You had the ability to take out about $3,000 per contract, basically, with this trade. Now, the first one, we had a short. Well, initially we had a long off of a bullish divergence here. Let me put a blue arrow right there. We had a long right there. That was in the very beginning of the trading room. That ended up being a nice trade. You took around from 80 to about 30, so around 50 ticks to the upside, which is about $500 a contract. Not a bad move. Then we had a short, the reason being our MQ regression had rolled over and started being in a downtrend. So we're looking for overvalued entries for a short in a downtrend. So the trend was down, we were overvalued, we took the short, and that ended up playing out very nicely as that market just crashed throughout the rest of the day and came all the way down, gave you the ability, like I said, to take out around 3,500 a contract in that area. We then had longs right here where this blue arrow is that gave us the ability to have around $700 in profit. The reason we took the longs there was because of this weekly trend line that crude oil is sitting on right now. We came down, we're moderately undervalued on the weekly chart. We were also right on this trend line, which was serving as support. So we said, okay, we have the go ahead to get long. We took the bounce after the big sell-off, and that was about $700 a contract to the upside on that bounce. So all in all, great day. We were up once again. I look forward to seeing everyone in the trading room tomorrow. And until next time, happy trading.